And we are live. I'm going to give everyone a few minutes to arrive, get their notifications, and join in. Thank you very much for joining. For those watching this in replay, so bear with me as we get ready. We'll kick this off on the hour. Pardon me, a little more coffee. Okay, let's do this. Welcome, live from London, beautiful England right now, live from London. I'm John Davies. Thank you very much for joining me for our new segment, Crypto Talk. Crypto Talk, and of course, this is for March 13th of March 2025. Thank you very much, everyone, for joining me, and for that matter, supporting this endeavor of mine. Remember, I started this these meetings, this broadcast, less than a week ago, and I thought it was time to clear the air and talk about some things in the crypto community and what I think is the most remarkable thing of our lifetime: decentralized finance, Web3. And I did so for a variety of reasons. Now, for those of you who are new here, you're probably obviously just getting used to the surroundings and getting to know me, but I thought it'd be good to have an introduction here. And so to you to understand my motivation. First of all, there's not going to be any efforts to monetize this channel. Not at all, not even slightly. I've been there, done that, not going to do that anymore. I was an early stage investor in this thing called the internet. Yes, when one of the first 100 people to actually think of something called the internet. So I'm not going to do that. But what I want to do is supply information. Supply information so you can understand that. And I do that because I believe not many people truly understand the possibilities of what this broad decentralized finance thing is, Web3. It really is remarkable. And if people who attend these want me to give a full-on series, almost like a class-like setting, a decentralized finance, I have no problem on doing that. I think I can do a fairly good job on that and give it in a manner that I think will make sense to you. It might take a little bit of time to understand everything, but it'll help. But for myself, I come from the most traditional of traditional finance. I am. I started off as a commodities trader on the floor in the pit, 1983, May of 1983. Within commodities, became a specialist in 1980. Before my career began, I opened up a white paper. I wrote a white paper on really quantitative science, and using options. And that was only 7 years. I know it's hard for you to believe this. 7 years after SIBO had offered options. So it's a rather remarkable thing. That was my career. And many people have, I'm very proud to say, have profited. Many people and corporations have been built around based upon my theories of using options. Wealth has been created, but also shareholder wealth. Equity has been developed, and companies have developed through managing risk. One either manages risk or risk will manage you. So I've got a great career. My father, I'm developing this as an early stage investor as well, and seen, for those who are not familiar with me, seen things before they happen, seen the move before the move. And I knew that well from my father, who was an early stage investor in tech, long before they called it Silicon Valley. I remember summers in San Francisco, and he was an early stage investor in this thing called memory. And I remember him with a laser disc, so excited that he could bring the great works of art, literature around the world on this disc. That's the way he looked at it, because he was investing for something bigger than just himself. And that's something else that we have to remember when we're talking about crypto and the opportunities of decentralized finance, something bigger than yourself. So here I am. I'm 63 years of age now, soon to be 64. And last week I thought, it's time to sort of start setting the record straight with some of this, the world of decentralized finance or crypto. Everyone's getting confused, and it dawned on me, and I suppose I could backdate this to 2014, and I'll get into that in a second, that whether it be traditional finance or crypto, no one's really listening well. The crypto sphere, I would like to think, could do a better job explaining to traditional finance, the guys and women, men and women like myself, on what this really means. No, it's not simply that the price of Bitcoin and the price of your coins are going to go up in value. It's something far, far bigger. But they haven't really done a good job. And the traditional finance has, we all know, has been obstinate, not really supportive, not really taking effort to understand. And as someone in risk management, let me tell you, for those of you who are younger, and I don't say that with I'm not meaning anything condescending. Those who are younger, excited about the crypto sphere, and you can't understand why traditional finance has been so slow to understand it. Let me take you back to the 1980s, the go-go 80s, and trying to explain managing risk. It wasn't so comfortable, and nor was it comfortable in 1986 when I started to tell people, as I would lecture starting at my local Newporter in Newport Beach, that if we don't arrest this problem of accepting debt and the habit of debt, by the time my generation comes to its retirement of 2025, boy, are we going to have problems. Yes, in 1986, I first predicted the problems that we're going to have in 2025. Call it luck, call it good reason, but that's what happened. So those are the things that, I think that we have to sort of bridge the gap and teach traditional finance why they have to become students of this extraordinary thing called decentralized finance. And certainly that's happening to some degree, but not nearly enough. Not nearly enough. And that's the point that I really want to address with you. It's very important. Now, a lot of the things that come down to it is certainly the points that I want to really emphasize here. Points that are the predictability of movements, the cycle of movements, and this is why I wanted to get to today in Bitcoin, is rather remarkable, the cycles of movements. And I think it's stunning, to be quite honest with, in Bitcoin. Again, my job for approaching 42 years has been able to foresee issues coming, movements of price, the natural movements of price, the wave-like theories. Remember, I talked about wave-like theories before most people were even thinking about talking about wave-like theories, except for academia and the very few people in this industry. And yet you look at Bitcoin, my gosh, it's right out in front of you. Now you're thinking, how could I possibly say that? How could I possibly say it? Well, it's easy, because I predicted it. And in 2014, I also predicted something else. Or should I say, I believed in something else. Predicting might be a little bit too bold, or not an appropriate way to term it. I said, you have to go beyond Bitcoin, and that doesn't mean anything negative of Bitcoin. And I certainly wasn't aware of what the genius of, Sergey Nazarov of Chainlink would come up with in the future. No, not at all. I don't want to be honest. But it's bigger than Bitcoin. It's understanding blockchain technology. At that stage, I don't think we even used the term decentralized finance. And of course, we never even thought of Web3 at that time and decentralization, not at all. But I knew at that time the big thing, and this is 2014, and probably a few years before that was discussing it. 2014 it was, but by 2014, pardon me, by 2014, I knew this was the handwriting wall. It's coming. And what's coming is broad adoption. Now, broad adoption is going to take quite a bit of time. It's not simply turn the book, and we can't see a bunch of, well, heck, old politicians my age suddenly putting laser eyes on a damn photo and saying that they're doing something that really isn't doing anything enough. And we can see how that's expressed in our prices of altcoins right now, or for that matter, Bitcoin. Yeah, the way this administration is working, we might like some of the story, but also the market isn't reflecting that very vocal confidence that some are purporting. 2014, I believe one thing. Once institution can manage risk, broad adoption will occur. That's 2014. It was a few years later before CBOE started to offer futures. Then it started to become a little more comfortable. We could become a little more comfortable with hedging. Now we've got a whole bunch, an array of assortments, and adoption is accelerating. We're well outside, let's say, the media right now that is talking of all the reasons of the movement of Bitcoin. I want to also mention to you, if for those interested in adoptions, and for those who want me to speak to or adoption of institutions, or those who wish me to speak to institutions of why you can create a treasury with Bitcoin, because I can strangle risk. and proper risk management is now available for Bitcoin. That is absolutely huge for you to understand. It's an enormous opportunity. But the other reasons why I just said, like a few minutes ago, how Bitcoin, the pricing is moving in a very predictable fashion. I don't usually do these things online because I think it goes against a fiduciary responsibility, and some investors might read it and base investment decisions on without understanding my full knowledge, and I don't want anyone to be harmed. I can say that because I did predict it. In January 25th of this year, a little more than a month and a half, approximately a month and a half ago, I said Bitcoin was pulling back to 75,000 esque. That's when it was 106,500 to a lower probability of 7,000. And truth is, my calculations are based upon the high of December 17th, where Bitcoin, using just sort of a generalized number from a variety of exchanges, 108,388. I look at the common, if we're looking at our fib or other common technical analysis, looking at a 36% retracement, that puts us at roughly 68,000 and change, slightly below my bottom end 70,000 table, but pretty much where I expect things to move. Yes, a 36% retracement touches, goes that 68 mid part of 68,000 go. That's right within my range, and that's what I based it upon. And then looking at of fulfilling that the standard movement of Bitcoin through the years, we've been analyzing approximately a trebling from that amount. So, i.e., getting to the 200,000 range within approximately a fiscal year, more directly, more around just over the 300-day mark. So it hasn't been moving predictable. So far in the retracement, going back to December 17th, that's right after the enthusiasm from the November presidential election, to my call, my very public call, and based upon my December 17 numbers and my public call on January 25th, and in prior years, I could go through that, extremely predictable. So what I suggest to everyone is consider how you address this pullback and where you look to load. Now, I'm going to ask people, if you wish to, and you're watching this, would you like me to present to you how you can prepare yourself for the potential very significant upward movement using options and options on ETFs, and for the matter, we could use BTC options, on how you can participate in the upward movement of it with greatly limiting risk. And secondly, how we need to establish this type of approach for corporations that are considering, institutions that are considering Bitcoin reserves. It's very possible this will accelerate adoption and provide an enormous freedoms that you certainly see within commentary as suggestions, say Mr. Michael Saylor, what he suggests. The future is extraordinary, but we have to, for Bitcoin, manage risk before risk manages, and recognize that risk management will facilitate greater adoption. So again, this is moving very, very comfortably. Now, the one thing that I also made reference to people, and it really needs to be understood better, and I think this should be really clear cut here. As I mentioned, probably one of the great things that should come to comprehend. This is more than just Bitcoin. This is decentralized finance, Web3, and that power of blockchain technology. This was very apparent to us, and anyone who read that white paper in 2008, and we moved along, it became very apparent to me what was happening. But for myself, I've had this long career, and given my career is deep banking. I am deep, hard, navy blue suit banking, 42 years nearly running in risk management, commodity trading, and I can assure you, few in traditional finance understand the implications of Web3. Modern banking of the future, is not banking of today and of the past. Sweep that aside. We're going to a period of extraordinary efficiencies. And of that, Sergey Nazarov's Chainlink is the leader. Matter of fact, all roads go through Link, everything. The world, as we know it, is going through vast, and I like to think very positive changes. There are some very positive changes. I know in a sea of negativity, it's difficult to see that. But the positive changes that are going to help a more robust economy, a greater share of wealth, bring people out of poverty, enhance growth, improve health services. All roads go through Link. Link, own the name, and participate in its growth. And remember, many of you haven't heard this. The best investments are the one you would never sell. That has to be one. You want to participate in this. A gentleman asked me yesterday if I could explain Link, and I prepared something. I know this is kind of rough on this, but I prepared something, and I'm just going to read through it. But you have to understand, Link was created by the genius of Sergei Nazarov with his partner Steve Ellison. They launched this in 2017, and this is a decentralized blockchain Oracle network, and it connects. It's the weave, aptly titled the link of smart contracts, real world events, data. It tackles the problems, the limitation of smart contracts, which is their inability to access off-chain data natively. And smart contracts self-executing agreements on blockchains such as Ethereum, they rely on external information to function real well. Chainlink bridges said gap, said issue reliably. Chainlink ostensibly operates as a middleware, a piece, a link again, of a network of Oracle's nodes that will verify and deliver external data to smart contract. They're operated by independent providers incentivized through Link, a native cryptocurrency, to supply accurate data. For those, hopefully this won't complicate it, be too complicated. It is an ERC-20 token for pay node operators and secure the network. Its key features, that's extraordinary, really, is decentralization. Again, okay, Keith, I'll go through this. Thank you. And please, people, use the comment box. That's the best way. Remember, I'm not pitching anything here. I want to help this community. It's a wonderful community, good people. It needs it. It needs some people coming in here, not pitching things, and for that matter, providing the benefits of the future, okay? And it's really as important. It provides decentralization. And this is one of the problems we're having right now with some of these comments from politicians. They're taking decentralization and they sure are putting centralized regulatory pressure on it or whatever it might be. And it's confusing. Chainlink, Link, include decentralization, extraordinary flexibility and security, scalability, centralized, unlike centralized nodes, Oracle's has SPF, single points of failure. Chainlink provides a distributed network that reduces manipulation risks. Its applications are extraordinary. They're quite vast. In decentralized finance, Chainlink will provide lending platforms, provide feeds for lending platforms, stable coins, and particularly the future of stable coins, which is much broader than what is suggested right now, much, much broader, and certainly has applications within gaming and anything else that might be considered flight data, weather, and it has partnerships, bringing up partnerships all over. And some of the partnerships, no, I can't describe it all as well as some of these graphs. Okay, so we'll be looking at this and how Chainlink answers to the future and how Link really connects it. Probably the best titled name that you could ever come up with. It really is a link and it connects everything. All roads go through Link. And again, the point that I want to emphasize, remember, the best investments are the ones that you never sell. And for myself, this period, and this has been a hellacious period in the last month in this sector, without question, are altcoins and Bitcoin. If you look through this, it's not pleasant. The best performing asset of the broad ones that are, on my buy list, already bought list and accumulation, is the worst. The best one is, best performing asset is really nearly double digits of pullback. So it's ugly. And if one considers Bitcoin, even if it's going in a very predictable pattern, it's off 15%. The biggest bargain of this, Link is down 31%. It's on sale. You have an opportunity. You go structurally sound. Now remember, it's very possible, not guaranteed, but it's very possible that as we see this further pullback, and I do expect a further pullback, it is also going to be very contingent upon whether or not we see escalation of trade war talks. That we might see the multiplier, the even steeper fall in something like Link, or maybe something else you might be considered, say AVAX, AVE, whatever it might be, right? We'll go over those at another time, but you use it to accumulate hard into the paint, okay? You always have to, understand those buying, those opportunities, buying frenzies, selling storms. You look when there's blood in the water and you accumulate, but the best investments, and Link qualifies as one of those best investments. It's a never sell. You acquire, accumulate, set aside, and watch this continue to grow through your lifetime. And I have a number of investments that I've made and I've never sold, and I'm very pleased to them. Some of them, one of them I bought, and I'll be 64 soon. I bought when I was 21 years of age, and it paved the way for my life. Okay. Wow, I went a little bit over. That's typically me. I tend to be a little bit verbose, but I want to make sure that I speak to everyone. You understand. If you have questions, leave comments. If you want me to address things, feel free. If you want me to start things off, it's so basic, I have no problem. We're doing this for free. We're doing this for fun, helping people in the community, whether you're a young teen just looking to think of these kind of things, or a senior citizen interested in the future of Web3 and how it can better the world for long after our days. I'm here to help you. Okay, so we'll be back tomorrow, same time, 0900 Eastern time. That will be on Friday. And as all, I'm John Davies. I want to thank you very much for joining me. Thank you very much, Keith, John. I do appreciate it, and everyone else might be watching in replay. We'll be back tomorrow, okay? And as always, remember, 2025, be the hunter, not the hunted. Thank you very much, everyone. Bye-bye. Thank you very much, Paul. Thank you.